Why investors are saying no to startups. So why pre-seed startups are struggling to fundraise and move to the next funding stage. Here today we're going to discuss the key reasons why investors say no, how to get to the next step, and what you would need to do when you get to the seed stage to get to this Series A stage. Here today with me we have Angelica Morrone. Angelica, great to have you, and let's get to the topic.
Hello, Daniel. Thank you for having me again. It has been a pleasure. We are ready today to talk about why very often in startups are ready to go to the further seed after the seed stage, or they're ready to go fundraising again, and they think that they know because they've already done the seed stage, but somehow they find a lot of difficulty. And why is that? First stage is the very seed stage is when you find a huge amount of difficulty. Why is it so hard for investors to be the first one to say yes? Sometimes there's the figure of a lead investor. You all know about that one. But in general, why is it so hard for investors to say yes? First of all, there is a very known failure rate of startups. So people know that, and they just want to wait until somebody else gets in, or the concept is validated enough, even if they have a higher valuation. We want to understand why we can entice them with even the current valuation. Sometimes the fear of failure is higher than the famous FOMO, the fear of missing out. We need to be able to communicate that missing out on this opportunity would be a real mistake and show them the reason why. Also, we all know that any investment in startup lacks liquidity and lacks control. So investors have a tough time. This is all we know. Now, why do investors say yes to the first seed round? First of all, let's have a quick look on who are these investors. Very often they are the 3Fs, family, friends, and fools. And they're not really fools. They're just people who are a little bit more risk takers, of course. And what they do is they believe in the team. They believe in the concept. The founders have a really good narrative. They're very good at storytelling. They've managed to capture the ability. They're good salespeople. Very likely they've been able to actually get people to buy into their concept. And just as if by magic, this seed round is closed. So what happened? Now we are going past that stage. We need more money. Do we knock at the same doors and get money? Not really, because it's very rare that the same people who went for the first round are the same who are going to take you past seed into round A and further down the line. So what do we need to show so that people who are more sophisticated investors are able to say yes? We need to show accountability. So we need to show them the beginning of the story and where we are now. When we went through the first stage, this is what we said we would do, and this is indeed what we did. Then we need to be able to follow up. So now we are at this runway. We're going to have these different milestones, and we're going to be following up until we reach those milestones, or we will explain why we may need to change them. This is very important because the first investors can be your best references to the round A or a further round. Thirdly, you need to stay the course. You can't possibly say, well, we wanted to make, I don't know, ecological washing machines, but we decided that electric cars are more interesting. That would never work. Even if it is a good market, if that is the case, you need to close down your company and start a new one, because investors don't like to see that you've been all over the place with your head. And then fourthly, you need to test the hypothesis, iterate, and test again, so that the investor of the second round knows that you've done it before, you're able to do it again, and their faith and trust in you is going to be exponentially growing. So what is it needed to really go to the further round, past the seed stage and into more serious investment territory? First of all, you are now sitting at the adult table. You need to be able to have interactions that are based on business, not just based on ideas and hypotheses or assumptions, God forbid. So POC and MVP properly done, absolutely important. Users, sales, have you done anything with that? Are you still looking for the right market? We need to show that there has been a team growth or consolidation. If you're still a one woman or a man show, or you just have the two co-founders, explain why, and explain why the two people have enough ability to actually grow the company. Do you have a confirmed business model? How have you confirmed it? Is it the right one? Can you scale it? This is important. Also, have you thought about going into industrial or commercial partnerships so that you are not going to be able to do this on your own? It's extremely difficult to do this kind of things and to scale a company into round A and further without any important partnerships. Let's look at them just one by one to have a quick idea. When I meet startups and entrepreneurs that come to see me, which I like to do because it's a great interaction, I always start with, have you raised funding yet? Yes, very good. How have you done? What have you done with the money? Do you have a POC or an MVP? How have you made it? How much money have you spent? Does it work? Is it good for your market? Do you know how much it will cost you now that you have an MVP to have a go-to-market strategy? Have you tested that you really have a market now that you have these very basic things? You remember, you're talking to somebody who knows that you have had money before. So you can't have the excuse of saying, well, I didn't have the money to do that, because you've just raised seed stage. You need to show that you've used that money properly. Now that you've had a little bit of money to spend, and very likely you've had on your runway that you wanted to increase users or have users and make your first few sales, show them to the investors. Show them how many users you have. Who are they? Do you have any repeat business? Do you have people who keep staying? Do you have a good word of mouth? Are your users, are your clients your best ambassadors? This is a great confidence metric for investors to hear at this stage of the company. So once you're ready to go into round A, then we need to talk about the team consolidation. As we spoke about in the other podcast, I always say that the team is very likely, and I'm not the only one to say that, of course, one of the most important factors. So are the co-founders still there? Will they actually have a saying in how the company goes? They will ask you to look at a cap table. Do you have a good, clean, understandable cap table? Once you raise the first time, you have a pre-money valuation and a post-money valuation. Are there any of the original people who were in the team maybe out? And if yes, why? This is very important. And at this stage, you need to address basic governance. Governance is everything and anything, but it's important to think of governance as having your house in order for any outside stakeholder to understand that you are an entrepreneur and you're not just a person with a good idea. And also, let's now quickly touch on the business model. I've actually had a company that had gone through seed stage, and they came to see me, and they had the POC, they had the MVP, they were showing some sales. When I asked them about the business model, the first thing they said is, yeah, we have a business model, but we don't like it. So we're going to change it. And that is a big red flag, because why are you coming to investors without having a confirmed business model? Business models need to be flexible, and they need to be able to be adapted to different challenges, but you have to have a confirmed business model. Do you have a very good clarity on what are your profit and cost drivers? At this stage of the company, you cannot just say, I've made a few assumptions. The assumptions have to be based on data. And because you've already raised funds, you should be able to do that. And then this is one of the most important things, because as an investor, this is an important point, and really, I would like to really put emphasis on it. We investors are not specialists in all of the fields that we hear, okay? I am invested in something like 7 or 8 different sectors. I am not an expert in any of them. So how do I really know that you have the right product or service for me to invest in? I will ask you, do you have an industrial or commercial partnership? Because if one of your competitors of one of your complementary industrial partner believes in you and they are experts in the field, all of a sudden, as an investor, I will be a lot more inclined to believe them and maybe have a chat with them, understand about partnerships, synergies, also understand even better the competitive landscape, because past seed stage, you should have a very good idea of your competitive landscape. And if you don't, say that, put it in your runway, ensure that the money that you're raising is going to that as well. Just ensure that whatever you say you do in the seed round is done by the time you go to the round A, or if it's not round or done, you have a really, really good explanation for that. And another last point is, at the stage of being ready for round A, you should have a really good idea on how to leverage both internal and external assets. And internal assets are, of course, your people, your knowledge, your intellectual property. External assets are your partnership, but also your board of advisors. Having a good board of advisors is a great presentation card. And having a draft or a board of directors before getting into round A is another really good thing to have. So I'm going to leave you with just a few words. Don't fall into the squirrel syndrome. Just remember that every decision, every pivot, everything you said you would have done in seed stage has to be proven at this stage, must be data-based. You have to show smart persistence, not rigid stubbornness. If you can do that, you will really impress your more sophisticated investors. This is all for me. Thank you, guys.
Thank you so much, Angelica. Great talk. And I have one question as usual.
Yes.
The most common situation we have, and you probably have, I meet startup founders at pre-seed stage. They haven't validated their MVP. They don't have sales. And they are already fundraising and they want to close a round. They say it's not a big round. We have very good terms. So what would be your recommendations for them so they do the right thing and raise the round?
Great question, Daniel. This is really important, by the way, and it touches a point that is very close to my heart, which is the cap table. And the cap table has to be kept clean. How do we keep a clean cap table? We need to start fundraising when we are ready to fundraise. If we can bootstrap and if we can show traction before we go for the first fundraise, we're going to be so much better off than otherwise. Now, there are exceptions to this rule. If you are in certain sectors, you just cannot show traction unless you have enough investments to go to market. And that is a little bit different and it would require a lot of time to answer. But in general, I always say to everybody, see what you can do bootstrapping. Even doing small consultancies, do things that are related to your field and that bring you to the phase where you can show traction. Once you can show some kind of traction, or at least you can show a really healthy proof of concept, then you go fundraising. Don't go fundraising, even if it's a small thing. Try to get people into different kind of funding. And this is a topic that is very important. Many funders think that it's either debt or equity. There are lots of things in between that can be done with convertible notes, with shares for revenue. There are different things that you can do so that your cap table is not going to be too polluted with too many people, so that once you get further investors in, they need to clean up your cap table before they can move on. So this is really important for me.
And that was Angelica Morrone, and we were talking on giving advice how to fundraise and why investors are saying no. This is the fifth and the final talk. We agreed with Angelica for now. Maybe we do some more in future. So go on our YouTube channel and see the previous ones, because those 5 topics are important for early stage founders when you starting your company, when you're building your company, when you track your financials, when you try to convince investors to give you a check. And with that, I also would like to ask everyone, please press the like button. This is super important because our channel does this kind of quality talks for free. because we want you to learn and succeed with your businesses. This talk will be promoted by YouTube to other founders like you are, and more businesses will provide more value to their customers because you will learn. And of course, you ask your questions here in the chat and subscribe to the channel. Thank you, Angelica, so much for the talks. I really enjoyed it. 5 great talks. What's a piece of advice? Thank you so much.
Thank you very much, Daniel, for having me. And I hope that our talks will be helpful to the people who are really, really trying to make a difference in this world by having successful startups. Thank you again.
Thank you. Goodbye.